All right, let's be real. Have you ever had a brilliant idea for a business? I'm talking a massive banana empire, but your pockets are, well, empty? Yeah, you're not alone. Today, we're going to break down the entire world of stocks using a super simple story about a monkey with a huge dream. Let's find out how he makes it happen.
So here's the puzzle, right? We've got our monkey, this amazing idea for a banana empire, but absolutely zero cash. So how in the world does he get this thing started?
I mean, this is the classic problem for any entrepreneur, whether you're a monkey or a human. You need capital to get going. You know the old saying, it takes money to make money? Or, in our case, it takes bananas to make a whole lot more bananas.
All right, a monkey's big idea. How do you fund a banana business? Our little guy needs a plan, a way to get that seed money. And let's just say his first idea wasn't exactly his best one.
Yeah, so plan A, robbing a bank. That did not go well. But hey, thankfully, our monkey is resilient. He's got a plan B that's way smarter and, legal. And this is where the real magic of finance kicks in.
And here it is, the big idea, stocks. See, instead of going to a bank for a loan, our monkey gets clever. He decides to sell tiny little pieces of his future banana business. Other, richer monkeys can chip in some cash, and in return, they get to be part owners. It's an absolutely brilliant way to raise money without owing anyone a dime.
So let's break down how this works. Step 1. Rich monkeys give our guys some money. Step 2. Our monkey takes that cash and instead of, buying a fancy sports car, he builds the business. He buys more banana trees. Step 3. Those rich monkeys get a piece of the action, their very own stock. And the best part? Step 4. When the business starts making money, everybody gets a cut of the profits. It's a total win-win.
And that juicy cut of the profits, that has a special name, dividends. So next time you hear a news anchor talk about a company paying out dividends, all it means is they're sharing the wealth with the folks who own their stock. It's basically the reward you get for believing in that monkey's big banana dream from the very beginning.
Next up, stocks versus shares. Is it garbage or is it trash? Okay, let's clear something up that trips a lot of people up. We hear the words stocks and shares all the time, and they sound like the same thing, right? Like potato, potato. But actually, there's a small difference.
I mean, seriously, aren't stocks and shares just the same thing? It's a totally fair question, because most of the time we use them like they are. But if you want to get technical about it, there is a subtle but kind of important difference. Okay, check out this analogy. It makes it so easy. Think of your stock as the entire banana tree. It represents all of your ownership in the company. Now, the shares, those are the individual bananas growing on that tree. Each one is a specific, countable unit of your ownership. So you own stock in the company, and you measure just how much stock you have by counting your shares.
All right, the jungle stock market, where all the monkeys buy and sell. So our monkey's business is up and running. Investors have their shares, but what now? What if an investor wants to sell? Or what if a new monkey wants to buy in? Well, they all head to the stock market. Just picture a huge, chaotic, bustling marketplace for every monkey business in the entire jungle. And you know what? This market, it has moods, big moods. When everything's going great, prices are climbing, and everyone's optimistic, that's a bull market. Think of a bull charging full steam ahead. All the monkeys are happy. But when things aren't so good, prices are dropping, and everyone's getting scared, that's a bear market. Picture a big old bear swiping down. And yeah, the monkeys are pretty sad.
Now, it's super important to know that not all stocks are the same, not even close. On one hand, you've got your blue chip stocks. These are the giants, the big, established companies like Big Monkey Inc. They're pretty reliable, but they grow slow and steady. Then, on the complete opposite end of the spectrum, you have penny stocks. These are from tiny little startups like New Banana Co. They could, maybe, grow incredibly fast, but whoa, are they risky? They could just as easily go bust.
So, strength in bunches. Why do stocks huddle together? With all these different kinds of stocks and all this risk flying around, how does an average monkey invest safely? Without putting all their bananas in one basket, so to speak. Well, it's kind of like monkeys on a cold night. They find safety by huddling together in a big group. And that big bundle of stocks? That's called a fund. See, instead of betting everything on just one company, you can buy a tiny piece of the fund. And by doing that, you instantly own a tiny little slice of many different companies all at the same time. It's the #1 way to spread out your risk.
A super famous type of fund is an index fund, like our monkey S&P 500. What's inside it? Simple. It holds stock in the 500 largest companies in the entire jungle,
We're talking fruit companies, bug companies, tree companies, even, the less glamorous ones. It's all about diversification, and that's why for most everyday monkeys, this is seen as a really solid, relatively low-risk way to invest.
So let's get this straight. You've got index funds, like the S&P 500, which are perfect for the everyday monkey. Low risk, easy to get into. Then you have hedge funds. Okay, think of these as super exclusive, secret clubs only for the richest monkeys. They use really complex, super high-risk strategies to try and get massive rewards. The catch? They could also face massive, devastating losses.
Okay, let's recap. We've covered what stocks are, where you trade them, and how they get bundled together. But that leaves us with the biggest question of all. Why do the prices go completely, bananas? What is it that makes them shoot up one day and crash the next?
But really, why do stock prices change so much? This is the million banana question for sure. A share's price is never just sitting still. It's always moving, always reacting to a million different things happening all at once.
At the end of the day, a stock's price is really just about what everyone thinks that company is worth. So, if there's way more demand for bananas, the price goes up. If the banana business announces it's expanding to a new part of the jungle, price goes up. But what if the CEO monkey gets hungry and eats all the profits? Yeah, the price is going to tank. It all comes down to performance, good news, bad news, and just plain old hype.
And that, my friends, is Stocks Explained with Bananas. But hey, before you run off and pour your life savings into New Banana Co., let's be crystal clear about something. This is not financial advice. As our monkey friend would say, please do not sue monkey. So now that you get the basics, maybe the real question to think about is, what makes a whole bunch of monkeys decide that one banana tree is worth way, way more than another?